What's going on, everybody? It's your boy C-Zar, and we are talking about MicroStrategy today. Hit that like button, subscribe if you want to see more content like this, and let's get into it, my friends. Let's not waste any time at all. Okay, so first and foremost, I want to look at MicroStrategy and what it's doing here on its moves down. If we take a high to a low here, you can see that you pulled up to your golden ratio, you didn't quite hit it, and then you went lower. Of course, you went lower right there, right? So if we take this next high here to this low, you can see that again, you went to the golden ratio, this time into it, a little bit through it instead of just shy of it. But this time we have pulled below the 382 again. Generally, whenever you go from your golden ratio to back below your 382, you do expect to go lower. But as long as you're holding the 236, that expectation can be kind of curbed or held off, right? Stayed. If we do close a day below $315, you guys, if MicroStrategy closes, you're at 327.91 cents right now. If Bitcoin happens to go down over the weekend and MicroStrategy opens up red to start the week next week, if we close any given day below $315.36, likely what that means is that this is not the low and that we will go lower. If we were to go lower, my expectation would be something on the lines of 263 to $238, $39, something like that. That'd be the expected range. The golden ratio is this line right here, the 1618 right there, perfect. Also the 123 moving average, the daily line coming up there. By the time that you move down here, perhaps that line is actually more in this range. You find support in that range and off that line together. I don't think MicroStrategy is moving down, right? That's not the purpose of me saying this. I'm saying this to prepare ourselves in case it does happen. My expectation is not that MicroStrategy goes lower, but if I say what my expectation is, and I will, that it's going to go up higher, and then we do move lower, and all we do is move down here to these areas that are very fine areas to find support. If all we did this, and then we moved up, right? And what I'm calling for here instead is that we move up now instead of moving down first. If we did this and then moved up, it's really not that big of a cause for concern. So the reason I'm addressing it is not because I expect it, but because if I'm talking about us going up here and then we do this instead, nobody's shitting themselves. Nobody's panic selling down at the bottom. So they're like, oh, we discussed this as a possibility. It wasn't the expectation. Darn it. We didn't get the play that we were looking for. We didn't call this perfectly and nail it on the head, right? But we are aware of this as a possibility and not phased, and we still are very well aware that the fact that MicroStrategy will go back above $500 and see new all-time highs in no time at all, likely by the end of January, if not certainly sometime in February, right? So if it goes lower, have that talk with yourself. It's really not that big of a deal. And again, I'm not calling for lower targets because that's the expectation, but more just to discuss it as a point of point of concern if it is to happen. A lot of you, or a couple of you, I should say, have been asking about this gap. Have we filled it? Have we not? Technically, with this move, we have filled it, and I know that it might be confusing because if we look at this right here at a low point, right at the low, there's a little bit of space left in this gap. And for those of you who don't know how to read gaps, just so you know, this gap, it doesn't fill here. The gap actually formed down here because that's where the day closed, right? That's where the day closed. Here's where the day opened. So that's the gap would actually be from here to here. That's your whole gap. And your low went here, so it didn't fill the whole gap. But this is, to me, that's a gap fill. It depends. Every chart's different. Some charts specifically do need a very like precise gap fill or a complete fill where it does go all the way through. Not all charts do and most charts don't. I would say that is suitable, but we could go lower. We absolutely could go lower even if that is suitable, but maybe then we'll get that actual gap fill if we go if we go a little bit lower, right? But personally, I don't expect that we will. If we do go lower, 263 to 239 is the target area. We're at 327 now, and I would expect that if that happened, it would happen so fast, like we'd be down and then back up to the current prices that we're at now in like the same week, if not within less than a 2 weeks time, right? Like it's the 11th or the 10th of January right now. By the end of this month, before the 20th, we'd be able to go down and back up, right? So if that move happens, I'm not expecting it, but if it does happen, I expect it to be very quick. Now we can get on to the thing that I am expecting, which is the upside, okay? And I want to start actually with the 3 hour. The 3 hour RSI here, we look at it, we've got this downtrend here in the RSI. Oops, probably more like this, a little blemish there, but you can see touched it here, touched it there, touched it there, a little bit of resistance. You might even be finding support on it. I don't know how you want to draw this line or what would look the best for best fit, but it kind of looks good right there, little blemish there, but however you want to draw it, it definitely seems to be broken out of this downtrend. Looks like that we might even be starting somewhat of an uptrend in the 3-hour RSI, and that's definitely nice. I would think that if we're starting an uptrend, if we're breaking out of the downtrend in the RSI, likely we're breaking out of the downtrend in the price as well, and potentially starting an uptrend in the price as well. I don't know what my thoughts are on this. Somebody was asking about this being an inverse head and shoulders, because I have been talking about this, but I don't think it is, right? My reason for it being that the right shoulder is just so much higher than where the left shoulder would have been at the top there, right? And then the right shoulder low is very precisely the same low as the left shoulder. One could argue, being that you moved up all the way down, from over here, you could start your shoulder anywhere. You could just say your shoulder started right here, and then boom, you do have a pretty good inverse head and shoulders. I don't know. But regardless if it is to be read as an inverse head and shoulders pattern or not, it definitely does seem to be bullish in nature. It does seem to be that we are finding support at previous areas of support, and volume has died off pretty well, right? It is above average volume on a 3-hour basis, but it is at some of the lowest points that we've been at throughout this whole kind of consolidation phase, telling me that we are ready to pick a side, breaking out up or down. So I suspect that we will break out to the upside, not to the downside. If we want to break out to the upside, the target to watch for, the number to watch for, would be just get above 365. We close above 365, you guys, and likely this is the low. Likely we don't go below 285. We close above 365, we are in the green. We're fine, okay? We close below 297, and we're in the doghouse. It's not good, okay? But I really do think that if we can close above 365, 424, 444 would be the next immediate targets. Probably achieve that by inauguration day, by the end of next week, and then pull back to start the following week or something like that, and then ending the month reaching for $500, if not attaining prices above $500 around the current all-time high, going into February reaching for $1,000 or around there as well, is kind of what my expectation is. I want to look at something else. I want to look at this time frame here, or this chart here. I've got different indicators pulled up. Daily time frame. I'm going to take this out of log. There we go. Someone might be like, why would you have it in log? That doesn't do anything. That's just totally pointless. It is pointless. It absolutely is pointless. But whenever you don't want to zoom in to get all these little like histogram wicks or not, if you put it in log, it makes it all obvious what's green and what's red, essentially, right? It's not this little game of what you can see versus what you can't see, because things get exponentially bigger as time goes on in price, but they don't reflect that in the MACD unless you have it in log. Anyways, man, I'm just getting away from the point here. The point being that on the MACD, we did have bearish momentum building, okay? Was building, and now it looks to be tapering off. Even if we were to get a lower daily close here, hopefully not lower than this, but even if it did close lower, I think that we'd be fine. We'd be showing some bullish divergence in our MACD. Maybe not bullish divergence, but maybe bullish convergence. The fact that our oscillators, the blue line and the red line, are down here around the 0 point could be a sign that we are ready to move up and move higher. After all, that's kind of what we did last time, right? We pulled down, we consolidated right around here. If I put a flat line right there on the oscillators, it's like literally right where our blue line and our red line, our orange line is right now. Not a whole lot to go off of on the daily, though. I want to look at the weekly. Weekly time frame. Also not a whole lot to go off of, I suppose. You might expect a bounce here, being that you're so close to flipping it red. You could even flip it red. This could suggest, I suppose, the weekly MACD might suggest that we actually have a bearish finish to January, so that's not good. And then the weekly stochastics as well are suggestive that we do continue to go down, probably. Right, this is a weekly, probably going into February. So it is possible, guys, right? This chart here rather suggestive that we don't go lower, but this chart here, to be fair, on the weekly especially, it would be suggestive that we go lower. It's very rare. It's not totally unheard of, but it's very rare to find support on the 50. I say that, and I'm seeing multiple examples here. You found support on the 50, found support on the 50 again there. I guess you found support on the 50 here. Okay, maybe this chart you do like to find support on the 50. after looking at this, I'd redact that. Okay, the MACD looks a little bit bearish, but this actually, its personality, it does like to bounce off the 50. It seems like it does. So actually, based off of this whole bull cycle, each time you've been overbought and you come out of it, you bounce off this 50 area and you move higher. You bounce off the 50 area and you move higher. Same thing here, overbought. You went a little bit below the 50 area, but you bounced. You didn't even get oversold, and then you went higher, bounced off the 50 area, bounced off the 50 area, went to the oversold zone, and then you went higher. Here you got overbought. I think this is our first interaction with the 50 area. We could expect a bounce here. We probably do move higher. So I don't know, guys. I guess that's it. I guess that's all I got for you. I suppose, you know, with this could agree with the idea that we are around the all-time highs by the end of February, right? Because if you look at this, first instance of being overbought, right? You came from being oversold, first instance of being overbought. You went down to the 50, and when you bounced back up, where'd you go? You basically went to the same areas of resistance that you were at before, right? A little bit higher, sure, but basically there still, okay? I have a point, I promise, okay? Next time, you went overbought right here, right? First instance there. And then you come down and you bounce off your 50 area. Whenever you bounce back up, I say 50 area, you probably closer to the 40 area. When you bounce back up, you find resistance right at the same area that you found resistance beforehand. Again, this time, again, a little higher, but still in that same area. You did progress going higher afterwards, but you went on like a week and a half pause right there still. Okay, and then being overbought, bouncing off the 50 here. When you bounce off the 50 here, after being overbought in your first little instance being overbought, you bounce off the 50, you pull up, and you are, again, very near the areas that you were at before. But this time a little bit of a lower high, and you did it again, very near the areas. All I'm trying to say is that a bounce off this 50, based off of what we've seen quite literally this whole cycle, might suggest that we are either going to be just below this high or just above this high, which is what I've been saying for the past couple of weeks now, is that I think that by the end of this, or maybe not by the past couple of weeks, by the past week now, I've been saying that by the end of this month we'll be near our all-time highs. Maybe above it, maybe just below it, but this stochastic, as long as we get a bounce, would suggest that. And to get a bounce here, we would need next week to close green. So anyways, guys, that's all I got for you. If you like the video, hit that like button, subscribe if you want to see more content like this. Thank you all for being here. MicroStrategy to the moon. It's at 328 now. I do plan on opening up some call options to start the week off next week. I'll let you guys know what my strike price is and what my expiries are and all that stuff. So take care. Bye-bye. See you on the next one.